My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends, just trying to make you some money. My job is not just to entertain you, but to educate and teach. So call me, 1-800-743-CBC, or tweet me at Jim Cramer. After a relief day, where the Dow advanced 62 points, S&P inched up 0.21%, NASDAQ dipped 0.01%, all of which, by the way, were much stronger than in the session at various times. I think it's worth thinking about why it's been so darn hard to staunch the relentless bleeding in this market. Yeah. Now, some would say it's the destruction of FANG, the high-profile growth basket I put together years ago. Others argue it's the fact that we have so much uncertainty. We know the Fed will be aggressive with its rate hikes, but not how aggressive. We know Putin will be crazy in Ukraine, but how crazy? And China, how long would they continue to lock down rather than accept Western vaccines that can end this madness? But as a stock picker for my charitable trust, which you, of course, can find out what I'm doing by joining the investing club, I've got an entirely different take. The chief reason that this market has become so difficult is that we finally have not-so-hot earnings. Yet Wall Street's not adopting its usual posture of buying stocks that issue NABF results. That's not as bad as feared. NABF. Now, 6 months ago, you get away with NABF all the time. Forgiveness reigned within 2 or 3 days. Not anymore. Case in point, Netflix. This is one of the worst performing stocks of the year, to the point where it's now valued at less than $380 per subscriber, the cheapest it's been in 7 years. Going into the quarter, Netflix had already been cut in half. If that decline, you might have thought, well, you know what, there's no way the numbers could be as bad as feared, right? But they were worse than feared. Hence why the stock's nearly been cut in half, again, in barely more than a week. The stench of Netflix has stunk up all subscription services, including Spotify, even though it had actual growth. It's really not as bad as feared numbers. Doesn't matter. The stock's down again anyway, because we're no longer forgiving. It's an unforgiving market. Of course, there are tons of stocks that can rally now that they've come down hard from their highs. But we need to figure out what can make those rallies possible. What needs to happen for them to rebound and not fall off into the Netflix crevasse? So I've been searching. I've come up with a new tripartite system of grading stocks for this moment. First, we have the exclamation point. And that's for good news, meaning the stock's entitled to go up despite the broader sell-off. This is what we're looking for. Second, well, then there is the question mark, chess master, meaning it's going down pretty much no matter what. And then I've got my new favorite that I really love, and it's called the asterisk, meaning if it would have been a great quarter, or more importantly, if it weren't for an asterisk, right? You asterisk things all the time. And then you fill in the blanks if it weren't for X. The asterisk might not be doing that well, but they've got a good excuse, so maybe we'll buy them. Let me give you a few examples. Later tonight, we have Al Kelly on the show from Visa. When they reported last night, oh, my God, the numbers were extraordinary, way better than expected. Tremendous car growth in the U.S. as well as the rest of the world. The one exception being Russia, which represented 4% of the business last year. They had to walk away from it. Despite a considerable loss from shutting down Russia, and I mean considerable, Visa's numbers were so good that the stock surged more than 6%. How did they do it? You got to stay tuned. We got Al Kelly, CEO. But right now, when you think of Visa, you should think of this. Next, how about Microsoft? Here's a stock that was down hard in after-hours trading last night because a news service had an erroneous account that Microsoft's Azure cloud business failed to meet expectations, even though it's growing at a 46% clip. Can you imagine people do this? They still trade off this stuff no matter what I do. I mean, like, should I just give up? I mean, 18 years. I'm just going to just one moment. My executive producer, how many years have I said don't trade after hours if you don't know what you're talking about? 16 years. Okay, good. I wanted to clarify that. Anyway, like Visa, Microsoft had a weakness. In the weakness, gaming, which was down high single digits. Whoa, really scary. Even though they're buying Activision Blizzard, you could argue gaming indeed has peaked. But the rest of the business is firing on all cylinders. That's why Microsoft, initially being down hard, ended up jumping nearly 5% today. So all right, now how about, yes, the ill-fated, and we all know this from watching some Netflix show that was about chess. We don't remember anything from Netflix anymore, right? What's the question mark? All right, well, that would be Boeing. Now, I don't have the words to express how truly bad Boeing is. They're the kind of words you can't say on basic cable, or maybe even on, like, I don't know, .com. Let me put it like this. If the world had 4 or 5 commercial jet makers, Boeing would be the short of a lifetime. But there are only 2 of them, Airbus being the other. So there's a limit to how awful this business can really get. We had a big position in Boeing for the Travel Trust, and we initially caught a nice rally, selling some at a nifty profit. But we made the mistake of keeping the rest. At this point, there's almost nothing going right here. I'm as fed up as a really nice person named Jim Lebenthal, is my friend from Scott Wapner's Halftime Report, who actually called for CEO Dave Calhoun's head. He mentioned it on a platter, like it was Alfredo Garcia's. Yes, demanding that he be fired. It was an amazing moment of TV, and I have to tell you, the litany of excuses is growing too long. This time his problems with making Air Force Ones? I mean, what Harrison Ford. I don't know. Still no China deal, not to mention no Dreamliners for sale because of FAA safety issues. Boeing just can't get its act together. Like Lebenthal, I'm wondering if maybe the stock simply can't go higher as long as Calhoun remains as CEO. Brutal verdict. Finally, there's the area that I find most intriguing, the one where I think that we're going to find in the future of 2022 the most used, and that's companies that get asterisks. The earnings get an asterisk if there's something away from the company that went wrong, something you can easily explain away, something that had nothing to do with the company itself. So maybe the stock is worth buying here because it could get forgiven later. An asterisk report is subject to interpretation. Sometimes good, sometimes bad, depending upon the way it is presented. Last night, we had 2 asterisk stocks. First was Texas Instruments, and then the second was Alphabet, which also used to be known as Google. The first, a gigantic semiconductor company, reported a not-so-hot quarter and then gave a very disappointing forecast. Stock plunged $6 instantly, blink of an eye, sat there. But those of us who then bothered to read the release, which I did after Boeing in '96, not that great, and listened to the conference call, became convinced that Texas Instruments actually had a very good quarter. It just had a big hole when it came to its Chinese clients. The lockdown crushed them, not themselves. It was actually the fault of the stars, not Caesar. So I put an asterisk on it. Texas Instruments would have had a great quarter if China didn't have such a suboptimal COVID strategy, which means it should be able to recover once the lockdowns end. Well, sure enough, stock opened down hideously. People were fleeing like rats on a ship. And then people accepted the asterisk around, like, say, 10:30 and took the stock back up to the point where it actually closed in the black. Yes. Of course, this is what we have, kind of what we have done for you lately, markets. You're probably saying, thanks for nothing, Jim. I didn't get to make any money on Texas Instruments. So listen to me. You've got an Alphabet asterisk. Yes, this decline off last night's amazing quarter was an absolute travesty. Everything here was all systems go, from search to YouTube, the booming Google Cloud business. But there was some weakness in the European YouTube ad business. How do you like it? Ukraine's in Europe. Who would have thought? Which is how this became a so-called missed quarter. I say this is the sign you should think of when you think of Alphabet. I mean, there's a big war going on in the region. So what were they supposed to do? What did you expect? I think we'll look back and say, wait a second. That excuse makes sense. So once the war runs its course, you'd wish you'd done some buying. By that point, you'll be too late. The asterisk will be removed, and Alphabet stock will be coveted once again. Then there's Meta Platforms, the artist formerly known as Facebook. When they reported after the close, the first thing you might have noticed was a revenue miss like that of Google. And then the second quarter revenue guidance was a bit light. But the market asterisked it. What was that all about? Well, guess what? Their daily active users, many thought they had dropped off a cliff. They were up 4%. They also beat on the bottom line by 16 cents and cut their full-year guidance by expense guidance by $3 billion. I didn't expect that. So what started as kind of, let's just say an ugly asterisk ended up as a beautiful exclamation point in just a few minutes' time. Here's the bottom line. Exclamation point, yes. Question mark, no. Asterisk, maybe. Just maybe. And that's where the money can be made after the earnings, because there are the decent ones that haven't run yet. Matt in Missouri. Matt.
Booyah, Jimmy Chill. Matt from St. Louis here. Long time, first time. How you doing today?
I've been chill lately. My daughter told me that the message people all love me. I don't need to read them anymore.
We all love you. Yeah, I know. You're
thank
good
you.
to go.
Thank you. She said they love me. She says the problem is I'm actually reading it upside down. How can I help?
I think I'm around your daughter's age. I love it. We love you. Take it with that. Yeah, April's been a rough month. Hopefully May will bring brighter days.
Yeah, I agree with that.
I wanted to start off saying thanks for all that you do real quick. I started reading your books out of college 10 years ago. It has served me very well.
Should I read another book? Should I read another book? I've been debating it in my head.
It's exactly what I was saying. A lot has changed over this last decade. I got out of college in 13, and boy, has time changed. I read back at Get Rich Carefully, and I look at the times now. Boy, you need to write one for the next 10 years.
Then that's exactly what I'm going to do. Let's make money together.
I love it. Let's do it. Let's do it. All right, Jimmy. So, hey, real quick, too, if you ever make it down to Missouri, you always got a spot in my duck blind.
I hadn't thought about that, but it's now on my bucket list. What's going on?
It better be. So here's my question. But before this recent broad-based market sell-off, the stock looked like it was setting up for a big breakout, similar to what Costco and Walmart did earlier this month.
Okay.
Despite the charts, this domestic retailer seems to be fundamentally undervalued when compared to its peers. It's flown under the radar this year, despite posting record revenues, record profits, and record growth.
Wow, record. What's the name?
Record. All right, here's the one. I'll give it to you, too, real quick. It's Target.
Oh, come on, man. Why do we have to even spend any time on that one? That is what I regard as being
House of Pleasure.
All right. Brian Cornell rocks. You know, he's from Whitestone, not that far from the wife. She loves it when I call her the wife, like when I talk about the Baconators in the 12th row. Exclamation point, yes. Question mark, no. Asterisk, well, frankly, maybe. And that's where the money can be made after the earnings reports. Oh, man, money tonight. Mattel reported earnings after the bell, and I'm getting to the heart of the toy maker's quarter with the CEO. Then travel is booming, and the consumer's spending. So how about buying Visa? Checking in with the company's top press. And from the F-150 Lightning to its first quarter results after the bell, there's a lot to discuss with Ford. People are selling it, and you know what? They don't know what they're doing. I'm covering it with the top brass. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.